Forex Signals, the world's most profitable Forex resource.
Alright, enough of that. Although I did like that song. Just sorry about being a little bit late, you guys. It's out of my control. This is not my job, so really, I mean, my main work was busy as hell. Anytime the market moves, the more clients you got to deal with, the more issues, the more situations, the more updates. Now, obviously, today we're doing a lot of updates. You know what happened on Friday. I mean, we did an update on Friday, and we're like, yeah, things looking pretty sick. We're going to see if the US session wants to sell off again. Uh, if it does, then you know the Aussie can fall another leg lower. So we're doing this update um, as the market's under pressure here on Friday, but you know still had potential to rally as you know US session came in and maybe it was overdone and we didn't have a second day coming, and it was just about trying to you know buy dips because we've been buying dips on Aussie, and so it was not safe. It was like, well, we can just wait and see if the US stocks want to rally, but you know it's an idea. We'll see how it goes. Wow, were we wrong? Has this sell-off got legs? Now that's the question you got to ask yourself now as a trader. This is pretty big moves we haven't seen for a while, especially in the stock market. All right, that's when I was doing my update. Yeah, nothing crazy, nothing crazy on Friday, and then bang, wake up 400 points low. Now my you know I'm sitting there in the morning going, what the hell happened here? You know, it can't have just been this bond market news. I mean, that can't be enough. But I mean, it's a little bit of a few things. No one really thinks they're going to raise rates in September. It's not about that. It's about, is the low in on the yields for America? All right, is the low in and the yields uh, for Germany? Now, people, I've had to explain bonds like 30, 40 times. Oh, thank you, little advanced PC care. I'll take care of you later. I wonder if anyone actually buys that rubbish that pops up. Alright, so let me try and explain it very clearly, just so that people who have no exposure to the market or bonds can understand exactly what is going on here. So, for a long time, central banks around the world, via their QE programs, have been buying their own bonds, their own government bonds. Now, this has created artificial demand for these bonds, and the point of that was to keep yields low. Now, at some point, of course, this was going to end. The artificially low levels of these yields, which is basically artificially high levels of bond prices, because when everyone's buying bonds, including the central banks, you got this free sort of support there. So it's natural that the bonds just went one way, and that was higher. Bonds have been going higher and higher and higher. That means the yields have been going lower and lower and lower. Now, what do I mean by that? You know, let's just make a very clear example of what I'm talking about. If I buy a 10-year bond at $100, worth $100 for $90, yeah, and I expect over 10 years I'm going to get back at the end of it, I'm going to get back $100. Okay, now that's got a yield on it of, say, let's just say approximately 1%. Well, it's not exact, but I'm just trying to make an example here. All right, so 90, I pay 90 and I get $100 back. Some of these bonds around the world was, you pay $105 and in 10 years we'll give you $100 back. Now that's, you know, crazy stuff, right? But that's the sort of artificial demand was doing for the bonds. And the reason why you did this is that if those sort of bonds are paying such ridiculously low levels, then everything else is a better form of investment, i.e. stocks and i.e. corporate debt, and all there is a much better investment, and all the yields around the world are going to be quite low. All right, now that's fine. Okay, you can do that for a couple of years. But when the ECB last Thursday did not explicitly say that they're going to extend their QE program past March 2017, you got a dramatic move in the yields higher around the world. Not just ECB, not just Euro yields, but yields everywhere. And some were saying, including a prominent bond trader, some Gudlick guy, I'm sorry, I'm not familiar too much with him, he was suggested that the low's in. Now, this got a lot of traction, a lot of talk. And the market on Friday went berserk. Yields surging higher. Like, you don't want to get stuck at all-time highs in bond prices, right? And the market collapsing on you. So if the bond market's been pricked, if the bubble, which has been there for 6 years, has been pricked, then the potential, outflows, the potential disruptions to the market, the potential dislocations going through, all right, is going to be immense. Now, while we're getting the feeling September's not on the cards, December sort of has been hinted at by the Fed. And you got this world where perhaps the central banks have done most, or if not the majority of their work, and that perhaps the yields are at the lowest they're ever going to be, and the bond market's never going to be this high again. And so you are getting this reversal, and people, which is one of the most crowded trades in history, in this long bond market, are all trying to get out pretty much at the same time. Now, the reaction on Friday in the US stocks was severe, maybe warranted, but whether or not we get soothing words from the Fed speakers and from the ECB speakers and from the BOJ in coming days, that will really dictate whether this is going to be a massive problem or just a minor problem. It's beginning like a massive move. All right, this is how massive moves begin. All right, but have we seen false starts before? Have we seen the Fed come to the rescue before? Of course we have. 6 years we've seen the Fed come to the rescue. All right, and the market hasn't fallen that much. It's only 550 points. Okay, that's not, that's not end of the world. That's just 550 points. That's a normal correction. If it gets down 1,000 points, all right, then you're looking at some severe case that you can expect Yellen to be dovish as all hell on September 23rd. You can expect ECB to come out clarifying the ECB QE timeline. You can expect the BOJ to be more aggressive at their meeting on the 21st. All right, so there's all these expectations you can come to expect there to be some two-way volatility. But at the end of the day, if these yields are going higher, then there's going to be one casualty in the currency market. And it's something that you've probably been referred to in the past as the high yielders. So this yield terms come back again. All right, now the high yielders, some of you may know, are the Aussie dollar and the Kiwi dollar. If yields around the world are surging higher, then all of a sudden Aussie and the Kiwi's yields aren't that attractive, and you're getting the yield spread start to shrink. All right, so the yield spread is starting to shrink on the Aussie against the US and on the Kiwi against the US. So the biggest moves that you're seeing following this bond market move is on the Aussie US. Okay, so I've explained this maybe 5-10 times today, but I'm going to try and do it again without missing anything. So it's bearing the brunt of this new idea out there in the markets that bonds are going lower and that yields are going higher. And has this got more room to move? Of course. This did this in 2 days. All right. Aussies is not the strongest currency in the world. The RBA's trying to cut rates. RBA wants it lower. New Zealand dollar, I mean, it's even more crazy. But New Zealand dollar's in the same boat. And, the potential for it to be a major new trend is very, very real. Okay, that being said, is it safe to sell here? Of course not. I mean, anyone can see that the 75 level is a support. If it breaks 75 today, we can start to get a bit more bearish. If it stays and breaks underneath. If the Fed speakers that we got left, there's only a couple. All right, there's only a couple. One of them in particular is a lady named Bernard. Now she's a dove. Now she should come out and support. Okay, but if she's been given the script that the Fed's trying to buy optionality, then the situation here could be that you don't get that dovish overtones, even though the market's going berserk, and that she doesn't come and save the day, and we could get that the third day of selling in the stock market, and that third day of crash in the Aussie. Imagine if the Aussie crash is always 74.20, and then tomorrow we're talking about it at 74.50. That's when I'm looking to sell. That's when I'm looking, okay, we're in on this. This is going to get messy. But right now, I'm not 100% convinced that the Fed's not going to come to the rescue today. So I'm a little hesitant to chase. I definitely missed it. I mean, most of the move was on Friday, but definitely missed this coming. This was always a in the back of every trader's mind that's been trading for 6 years is like, I wonder when the bond market's going to start going the other way. I wonder what that would happen. When I looked at the stock market on Monday morning, on Saturday morning, I was like, fuck, did someone come out and say they're raising rates in September? And I was like, sorry, I looked at Aussie first. And my first thought is, wow, stocks must have got smashed for this to happen. This is only going to happen if stocks got smashed. This is back 2013, 2012 type moves. So it's a relatively large move. I'm excited as a trader because we haven't had volatility like this, right? This is looking like we're breaking to the downside. Yeah, and we get some potential moves down here, another 500 points. Maybe the Fed comes out being super dovish. Yeah, we can start to buy again. It grinds higher over the next couple of months. That's what I'll probably be looking at. But this story could morph into something terrible. It could morph into higher yields, leading to higher debts first, servicing charges for corporate debt getting more scrutiny, a few companies being unable to service higher interest rates, those companies going bankrupt, feeding into more and more negative news that leads to terrible stuff, right? I mean, when the central bank game of easy money ends, there's going to be some blood on the floor. This doesn't end pretty, but it is a little bit early to suggest that we're going down that path. That's the 10% path, right? Maybe the 5% path. But that's a doom and gloom sort of scenario that you may see develop at some point in the future, where the interest rates are rising. No one's prepared for that. And of course it has to happen. That's just the way the market's set up. You can't have one-way action forever. And more people have sort of locked in these ultra low interest rates, and then when they come out and they're no longer ultra low, they're going to have to face reality. I mean, here in Australia, we've got interest rates at 3.75% on housing loans. Oh, fuck, it's so low. I mean, no one can service some of these housing prices at 7-8%, where it was just 3 or 4 years ago. So I mean, how does this end well? It doesn't. So we have to be always mindful of the back of our heads that this is gonna someday be a significant sell-off, and whether this is the case. I mean, I think the case can be made though that we're a little early to get too bearish, and that the Fed's going to be dovish. They're not going to raise rates, and everything's going to be okay. ECB will come out clarifying, and we'll get another 6 months a year of market rally. That's where I'm playing it. Soon enough, we have OPEC meeting. Now, oil, we need that OPEC meeting sooner rather than later, because oil is coming under pressure with the general US dollar strength. And I don't think anyone really believes they're going to have this wide-ranging accord. Iran came out over the weekend or on Friday, and they're like, oh, we want to freeze of production for everyone except for us. We want to be able to produce a lot more if we can. I don't think Saudi Arabia is going to like that. And exactly the sort of relationship Saudi and Russia has is hard to understand just yet as well. So I will go into depth about that later. It's not OPEC meeting. I'll find out exactly when it is soon, but not tomorrow, not tonight. So that's all right. We've got a little bit of time. This week, if somehow things settle down and we move past this bond issue, then we're going to be jumping straight into our old friend, the pound. There's a bit of data, very important data, that will be critical to whether we can get back into our long trades. Mainly what happens with this bond market and whether the US dollar bid subsides, but importantly, we got the CPI and then we got the BOE. Now, those two are a pretty fatal combo. You think the BOE is going to be, well, similar to how they were the other week, but now the market knows that they're talking it down. Maybe not as effective as they were last time. And any sort of discussion of perhaps they're wrong about this recession could lead to this pound recovery. But I'm more interested to see what the CPI data is. Now, this is going to be like the first piece of CPI data post-Brexit, and what we might see is a jump in the prices, because obviously their currency dropped 10%. You can't drop your 10% currency and not have inflation imported. Everything's 10% more expensive. Straight face value. So hopefully we see some inflation coming through. That would be really, really bullish, I believe, and add to this whole recovery story. I mean, one of the mandates over there, one of the biggest mandates, is inflation fighting from the Bank of England. So it could be really helpful here for this recovery trade idea. Added to that, if we do get some stabilization in the stock market, or even a rebound in the stock market, then the pound and the pound yen probably going to be the two biggest. All right, but by no means am I endorsing this trade today. This trade is still hypothetical. I'm just looking at this as potential, the way to play the other side of the market right now, buying pound against the US rather than anything else. The way to sell, obviously, is to sell the Aussie. Aussie's got the biggest impact. You could sell the Kiwi, but then you have to deal with the Kiwi shenanigans. So we don't have to get involved with that. All right, I don't want to get involved in that. How many times are we going to get bitten by the Kiwi before we give up on that? That's Kiwi shenanigans. But yeah, hopefully we get a clean break today. Market finds support somewhere, maybe a 200-day moving average. I think it's moving up here, 74.50 to 74.25, depending on what formulation you use. Get a little bounce back up to 75, a clean little test and rejection, and that's the trade of the week, right? That sort of bang, 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 selling here, stop here. Now there is a little bit of data on Thursday, but okay, we're just going to have to try and get past that. But what we hope to get involved in is a big market move here that's relentless and sort of forces the Fed's hand. So ultra aggressive downside in the stock market. I mean, you don't want to just sit there watching the markets fall. You want to try and get a part of it, right? Now, I'm coming late to the party. This is day 2. At the bottom of day 2, I'm like, well, geez, I missed a fair bit of this move. But I'm not looking to buy. Yeah, I'm looking to sell. And so you got to get your head on straight in terms of that. Those who are buying here are fucking mad. I mean, it might work out, but you're really testing luck. If this level holds again, it's it would surprise me. The lack of a bounce today, wow, and just straight into selling in from the Eurozone, Euro session. I think we're going to take stops 74.80 very soon, and then we'll move quickly though to the 200-day moving average, and then we can talk about getting in on that rebound. That's the trade. I'm not selling here, of course, but buying here. Ooh. Ooh. So yeah, I mean, that's the market, boys. I mean, it's a crazy market, and we've got some fun, right? It's all, forget that Fed business where we'll sell in the US dollar. We've got something bigger going on now, and we can go back to selling the US dollar if things settle down. But right now, we can't ignore this. So I'm sorry if I've got you all buying pound and you're like, oh man, it's down 130, 40 points. What are we doing? What are we doing, Tony? What are we doing, Tony? I'm like, get out or pray, because this is looking bad. But this is one pair that I am looking for the counter trend later in the week on the good CPI data. Just, right now, no hurry. Dollar yen's sort of trapped. Dollar yen's trapped. Usually it would go really well in a market where the yields are going higher. And you did try and see that on Friday, but then you saw this reaction to the stock market and Nikkei dragging it down. So this is a double pack, left, right hit on the Aussie yen. Aussie yen's getting destroyed. Now eventually that becomes a nice level. I don't know where that would be, but 73, 72. But even then, right, you need to see why it's down there. Who's causing the problem? If it's Aussie straight, that's okay. If it's dollar yen below 100, that's not okay. Significant downside post that too. That's Lehman Brothers, if you don't know what happened that day. That was my first account wipeout. I bought Aussie yen at 80. And it fell to like 65 that day. It's down 15 big figures. I couldn't believe it. But I was only into the market for 1 year, so I was like, oh. Okay, this is how you lose your whole account. And I was trading pretty small. I think it was only like 0.5 of a lot. I lost like 10k, something ridiculous. Something ridiculous. So yeah, I mean, you gotta know what can happen in the market, but it's the rumblings through the market right now is that this is serious. If this is real, this is serious. But majority of people think it's just an illusion, right? It's not the beginning of the big one. But you still got to respect the price action, right? Until we get that sort of bullish stock market. So the Dow's down another 50, 100 points now. It didn't close below 18,000. It's only opened below 18,000 in the Asian session. We need to see a rally here. We need to see some recovery in some of those majors and someone come out to stop this, because if they don't stop it, they let it fester, who knows how it will evolve. So I suspect they will do something, but in the past it's taken a little bit bigger sell-off to get them really motivated. Alright, so let's have a look at some of the bank research, because that's important. Actually, I do want to have a look at the new website. What is going on here? How do I hide the room? How do I hide the stream? Hide the video. Here we go. Short Aussie if it's a big one. No, my Aussie Kiwi war is not over, but I've got other issues I've got to deal with. Aussie Kiwi. I did put a little hedge in. Little hedge. Not admitting defeat, I'm just a little tactical retreat. I get the feeling we're testing parity. Gonna need a bigger boat. Now I've got bigger issues. ASX, I started buying into ASX and some nice levels, and the market just collapsed today, so I bought that a bit too much. So I'm a little bit biased. I'm gonna have to start hedging that too. And we're down like 5k in a couple of days. It's ridiculous. So yeah, I mean, I'm gonna get neutral and then start to get short and make back some money here, as long as I get the right signals that they're not taking care of the issue straight away. If they start to take care of the issue straight away, I'm going to be looking to get into some recovery trades, mainly by the pound. That's the main way. Cable's not going to go down easy. You need the data to turn negative, and you need this US dollar surge to keep on going. But yes, selling anything. Gold is interesting. I had a debate today with a trader, and I suggest that gold will end up higher. Gold will end up higher. But I'm not sure. If things really hit the fan, right? I think gold will end up higher. Right now it fell on the US dollar strength, but I think that people still want to buy gold if things are falling apart. We'll see. The battle of the safe havens, US dollar versus gold, could be coming up. Now, I haven't looked at this before. This is the first time in the room, actually, so let's have a little look how it develops. Ooh, so much nicer. Although I'm going to have to change my colors, right, to fit with the background now. FX stash. What are we doing? You are a Kiwi short. Very dangerous trade, mate. Very dangerous trade. Kiwis, remember, one of the ones that's going to get hammered here. You're a USD short. I like that trade. Pound long. Pound long. Yeah, I mean, you don't have to ask me to buy. You don't want to buy when there's a bigger issue. The recovery trade, there's nothing wrong with it. But buy the pound versus Aussie. Buy the pound versus Kiwi. Don't be buying pound against the US dollar if the US dollar is surging. It just doesn't make sense. Alright, let's see. I think this guy's posted Aussie Kiwi long 20 times. I also want it to go up, but I don't think posting it more is going to make it happen, Sean. And nothing about that chart says it's going higher. But I'm in the same boat, so hopefully it does, mate. Hopefully it does. Now, dollar yen short requires... Well, it worked out, Billman. So you get a little tick. Billman's back. Billman had a little holiday. It required the risk off to beat the US dollar strength, and it did that today. It's the most dangerous pair to trade probably right now. Hardest to predict. Short euro pound isn't the same as long pound Aussie or pound Kiwi. The euro is actually stronger in a sell-off than the pound is, surprisingly. That's just because the euro started this, right? The eurozone bond surge yields started this, and there's one central bank out there where the yields are not really reacting so much, and that's UK yields, and that's because they've got their own little super stimulus package coming, right? You don't want to get in the way of the central bank. So, pound's not going to do the best against the euro, not going to do the best against the yen, not going to do the best against the US dollar, but it may do very well against the Aussie, may do very well against New Zealand dollar in the scenario that we talked about earlier. Obviously, if things get better, if the Fed comes out and is ultra dovish, then pound Aussie, pound Kiwi is pretty dangerous trade. So let's just see what Brannett says. Starting tomorrow, there's a 2-week blackout period from Fed speakers. So this is the last night. Tonight we get the last night. And I'll bring up exactly who's speaking and what they're saying. Something to talk about. Video capture. Off video, can have a drink of wine. Where are you, Goldman? So there's a few things over the weekend. Every weekend you get the IMM report. That's a commitment of traders type report. You see the pound hasn't moved that much, which is surprising. Okay. So speakers for today: New York Times, Lockhart, non-voter. Yada yada yada. Kashkari, non-voter. Not that important. The last speaker of the day. Brainard. It's a lady. Lael. We'll discuss the economic outlook and monetary policy. Beyond interest. The economic outlook and monetary policy. Pretty much on point. And it has Q&A. So this is she's the last one to speak. What they're talking about here is that there's a 2-week holiday before they're not allowed to say anything. Now she spoke before the March and June meetings, urging a patient stance both times. She's a bit of a dove. So, we've got to take that into account. That's what's happening tonight. She's balance of risk probably going to help stabilize things and start a US dollar sell-off, right? But I'm not going to leave her open trade and go to sleep, because the market might just ignore her, go straight through and go for a third day of burst, and they'll be like, oh, how come you haven't sold yet? The market's in a huge sell-off. Well, I didn't get a chance, right? Didn't get a chance. You know how I like to sell. I like to sell rallies. I haven't got anything here. So yeah, I mean let's get this out. Yeah, the Aussie Kiwi trade's going to be fine over years, guys. We just might have to wait 6 months. You're going to learn the patience required to make money. Just joking. It's hard, man. It's always hard. Trading's hard. We really shouldn't turn a short-term trade into a long-term trade just because it's at all-time lows. That's just our inner brain saying, don't take the loss. And we know that, right? But we just let it win this time. So I think it's important to bring up the technicals on a day like today, just to see where we can get. Euro, as usual, has done nothing. If you're watching this at YouTube, guys, come across to the main room. Forex Signals had a nice little facelift. Can ask questions there, PM me there. I can look at a particular question for you, a particular chart. Dollar yen. Yeah, see, pound's got a little bit more support coming through down low here. I don't know if I'm too keen just right now, but in next level low, I'm starting to sniff around. Okay, dollar Swiss, you can't trade. Yeah, here's the one we're in for here. Now, where is their 200-day moving average? Remember we had that argument 2 weeks ago about the two different 200-day moving averages? How MT4 was wrong? Then we got confirmation on another account that MT4 was right, and then it had two different pieces of research from two different houses suggesting that it was 20 pips away. It's targeting this little trend line down here. I don't know. I suggest we bust this. I think we'll bust that pretty good. Kiwi's got the bigger room to move, right? We want the Kiwi to fall so fast. That way the Kiwi hasn't even changed trend yet. The Kiwi's still just basically pulled back to support. Not like high support, not low support. It's got hundreds of pips to move. Its 200-day moving average is well low. $68.69. So we're talking like 500 points still. 450. Where's the Aussie? 73.95. Yeah, swear, man. What the hell? It's still 20 points different. If someone can solve that problem for me, I swear I'll buy them a beer. It's actually 50 points different now. I'm just going to see if the Dansky one's out. Now remember, Dansky supported the Credit Suisse. So I want to see who's right, who's wrong. And if our mate EMR's up, we're going to read that to finish up, guys. So EMR is that really good macro view, and what we need right now is some macro view. Alright, so where they're putting the Aussie 200-day moving average here. Alright, so they're obviously something's wrong with the way I draw moving averages. I do a simple moving average, right? That's all I do. But I better get on it because I don't want to be using incorrect lines. So there you have it. Your analyst can't draw a 200-day moving average. It wouldn't be a weekly. No, it wouldn't be a weekly. All right, I'll find out, guys. I'll fix that, whatever the issue is. Maybe they're using an EMA. I mean, we can check that, right? All right, that didn't help them. All right, that didn't help. Jesus. All right, we'll find out. Either they're wrong and I'm wrong. Pretty sure it's me. Pretty sure it's me, but I'll figure it out. But it's the same on the pro real time, right? We put on the 200-day moving average. And this is professional charting. Alright, so there's nothing wrong with the calculations here. It's just what are they using as the 200-day moving average? How are they getting it 50 points lower? Oh, Nick, what are we doing today? We're selling the Aussie. If it breaks 75 and it bounces, we're selling. It stops above 75 again. And if the looks like the US stocks are rallying, we're going to dabble into a little bit of pound buying. Okay, so that's the two ways I'll be playing it today. Looks like we just had a little test here on the pound. Nothing there. Alright, guys. Well, look, if there's no more questions today, I'm going to leave it there. We're going to see how this develops. It's definitely interesting times to be a trader. If you're not in the market, you get back to the market right now. You cancel your holiday and you come back, because this is serious potential to make money. And that's what you want. You want this sort of uncertainty. You want this volatility. That's what I'll be looking at going forward, trying to make a bit of money from that. It's all about this bond market. We're going to look for stabilization signs, a bit of stock market rebound if we're going to go against the US dollar. Otherwise, we're looking for opportunities to get short the Aussie or short the Kiwi. Yes, I've been buying pound for a while though. I wouldn't be buying the pound, that's not my main game. My main game is selling Aussie, but buying pound if things look like they're settled down, just for a relief rally. I think I got stopped out on some pound. Gosh. All good. Anyway, look, Nick, I love the new site, mate. Looks good. We'll be back tomorrow. I'll try and get the stream saved here. We'll see if I can find it on the new site. Everything looks a little bit different, but I think it looks nicer. Alright, guys, have a good night. Good luck trading.